Hi everyone, welcome to the channel. If you're new here, then Perma Bullish is a channel where we talk about finance, careers, and careers in finance. We are approaching the end of 2025. 2026 is about to begin, and I felt like this might be a good time to sort of share with you how I'm positioning my portfolio for 2026. We are only going to be talking about stocks today and my entire portfolio for 2026 and why I think the next 18 months will be wild for Indian equities. I'll try to highlight for you. Now, this is not financial advice, so please make your own due diligence and exercise your own judgment. Uh, if you don't know who I am, then I'm an ex IB professional. I have been an investment banker for over 10 years, and I've started teaching about personal finance and corporate finance very recently. If you want, you can check out my courses. The links are in the description. And if you're somebody who wants to learn more about how to analyze stocks, how to do valuations, how to create your own robust portfolio, then feel free to check out the NISM 15th course, which is live on my website now. You should also join my Telegram group where we have these discussions and updates very regularly. And you should subscribe to the channel if you have not done so already. So, without further ado, let's move on and look at what the portfolio looks like. So, first, let me give you a little background on what is the rationale behind creating this portfolio. So, we look at three factors. We look at what does the Indian market look like currently. We look at what is the narrative going forward or what is the narrative going into the next year. And we'll look a little bit in the global macro picture. So, what does the Indian market look like right now? Now, Nifty is at all-time high or close to it. However, there has not been a major return coming in the last 1 year. So it has sustained this 1 year high about for last, I would say, 9 to 12 months, but it has been selective pain in different portfolios. So if you're somebody who's wondering that why is Nifty high and why is my portfolio bleeding red, then the reason for that is sector rotation. There's a lot of rotation happening from certain darling sectors to certain sectors which were fallen out of favor till very recently. And if you look at the weights in Nifty and Nifty Next 50, you'll realize that a very small number of stocks are actually calling the shots. And since they are not going anywhere, therefore the broader index is not going anywhere. There are certain themes that have started playing out in the markets. IT has started recovering. If you look at IT in the last 3 to 6 months, there has been super nifty returns in the IT sector from most companies. Financials have started flattening. It's most more likely the case is that the credit cycle is bottoming out, and therefore we might be seeing an upswing in some time. And consumption has more or less been steady. There has been some incentives from the government in terms of GST cuts, etc. But consumption has more or less been steady without being inflationary. So those are the three main things that come out when you look at the macro picture. Valuation wise, the mid and small cap valuations are still stretched as compared to the large caps. So, what does the economic narrative look like? This is the second factor that we want to look at. There is generally a capex revival, but private sector is still cautious. All the capex that has happened more or less in the last 5 to 7 years has come from the government side. The private sector is not really investing. Second, credit growth is only happening in pockets, which means that banks are not lending to everyone. They are being very selective about who they are extending credit to. The third is formalization and tax compliance process. There's generally been a wider net in terms of compliance, and more, you can say, industries are becoming formalized at a faster pace. And finally, there is a more domestic supply in the markets as compared to foreign supplies. As we know that FIIs have generally been selling in the Indian markets. However, the domestic flows in terms of SIPs and mutual funds have continued. That puts us in a good place to look at the global situation. Now, in terms of the global macro picture, there is a risk of AI capex boom slowing down. Now, what we've seen in the last 1, 2, 3 years is that a lot of US growth, let's say the US economy, if it is growing at 2.5 or 3%, then about half of that growth is coming from the capex led by AI. That is likely to taper down in the future. Already questions are being asked on whether AI is actually going to rationalize the kind of returns that for the investment, the kind of investments that are being made into it. And when that happens, I think India is going to be a beneficiary for that. And you might be sensible enough to sort of play that rotation from anti-AI, from AI to anti-AI stocks. China is seeing demand stagnation. Therefore, the supply chains are being reshaped, and a lot of reshoring is happening in different markets. India is also likely to benefit from these. Then there's a lot of geopolitical reshuffles like friendshoring, which is resulting in an in China plus one strategy. India is a key beneficiary of that. So, what is likely, in my view, the key catalyst for 2026 going to be like? So, there are certain things that are likely to happen. An interest rate cut was expected in India, which has already happened. RBI has cut down overall about, I think, 125 basis points so far this year, which means that a major liquidity infusion is going to to happen in the near term in the market. So valuation wise, we are likely to remain stretched because the flows are very, very high. Now, FDI inflows are likely to pick up because valuation wise, I think we are reaching a stage where it does not make sense. India vis-a-vis the other markets is sort of the premium is going away, and therefore a lot of FDI investment is likely to come back to India in the next few quarters, especially into the manufacturing sector. There will be an anti-AI rotation into undervalued real economy stocks. When I say real economy, I'm talking about things that you can touch and feel, more aligned with manufacturing, infrastructure, and capex related, capex heavy plays. Then the domestic fund inflows are likely to remain strong. So a lot of SIPs that have been ongoing, they have continued strong, and the domestic demand for financial instruments in general has been relatively strong, and that is likely to continue. There is a chance that there might be a slightly somewhat global crash or at least a minor correction in the next year. So that is something that people need to be cautious about and prepared for if they want to take advantage of that. Then in the Indian economy side, there's a general self-reliance, which means that there's a lot of midstream players which will be big winners in the coming markets. A lot of small cap and mid cap companies which are operating in the midstream manufacturing or infrastructure space, they're likely to benefit a lot in the coming days. Consumption is likely to remain secularly growing because the demographics and the urban incomes are generally in support of consumption stories. Valuations, however, is something that we will have to exercise our judgment on. Now, let's look at the exact allocations that I have. Now, I will not be mentioning any stock. So let me just try to make my image smaller and then we'll continue from there. So there are, I would say, three or four broad buckets that you can look at my portfolio strategy in. The first is industrials and manufacturing, which is about 66% of my allocation. The second is consumer plus leisure plus travel, which is about 23% of my allocation. The third is BFSI and digital finance, which is about 8.6%. And the final is IT services, which is about 3.6%. Now, keep in mind that this is something that has been arrived after doing a stock level analysis. So I don't do top down approach. I do a very bottoms up approach where I read upon companies. I try to analyze them from the fundamentals of their finance. And from that, I come to a conclusion on whether or not it should be a part of my portfolio. If you're somebody who's interested in doing the similar kind of corporate finance analysis, check out the NISM 15th course. It is live on my website and I am giving discounts right now. You will get the course material and you'll get live sessions with me with continued. Now, coming into the stock specific data, the first stock that we have here is a large cap industrial leader, right? So this is about 10% allocation of my portfolio. And what I'm talking about here is a very dominant player in India's auto ecosystem. So I don't need to tell you which company it is. I'm sure most of you can guess. If you're able to guess, please make sure that you mention in the comments. The second one is a large cap infra execution giant. Now, this is a tracking position. I used to have this in my portfolio earlier, but I exited it because I made my, my target was reached. But I've started tracking it again, and therefore it gets a 1% allocation. It is likely that this will move up somewhat in the coming future when I allocate more to my portfolio. The third is a mid-cap auto components player. Now, this guy is a large supplier to this guy, number one. So, the number one is large cap auto industrial leader. Number three is a mid-cap auto component powerhouse, and it gets a very large allocation because it has run up quite a lot in the last quarter. I started creating this portfolio in the last 6 months, and in the previous quarter, this has run up quite a bit. So, what used to be about 10% allocation of my portfolio has gone up by 31%. I have not added any capital. Uh, if you want, you can take a guess on what this stock is and put it in the comment. Anybody who wins will get a free ebook for me for no cost at all. Next is a mid-cap packaging and specialty material producer. So this is a stock from one of India's larger industrial houses, the older industrial houses, and they've recently acquired a couple of new technologies which will likely place them very well in the packaging and specialty material space. I'm very bullish on this space in general because if you think about it, in the midstream segment, there's an upstream, downstream, and a midstream segment. Specialty materials lie at a very sweet spot where they're lying at the intersection of the upstream and midstream segments. They are like the backbone of any kind of heavy manufacturing or capex intensive work that takes place. So I'm very bullish about this stock and this company in general, although it has not done so well in the last 3 to 4 months. The fifth stock is a mid-cap cooling system supplier. Now, in any industrial plant, wherever any kind of manufacturing, etc., is happening, there's a demand for a lot of cooling systems. Now, these are very different from the usual air conditioning systems that me and you are familiar with. This company that I've invested in, they did an IPO about 1 year back. and they have done relatively well since then. I am very bullish on this particular company, especially on the promoters, given the kind of background that they have. If you're somebody who has figured out which company this is, I'd be very curious to know if there are other people who are tracking this stock as well. Then there is another tracking position. This is in the solar cell or module supplier space. It's a small allocation. I feel like there's a lot of overcapacity coming into this sector, and it is possible that I will trim down this position. So this stock might not be here in my portfolio in the coming, let's say, 3 months. Next is a small cap industrial services and flooring supplier. Like I said, I'm very bullish on this general space, and therefore I've created a tracking position for this one. Finally, there is a small cap heat exchange technology firm. This is very similar to the HVAC industry, if you know, heating, ventilation, and air conditioning. And this is likely to see good uptick in the coming days in India. This is more of a long term bet for me. I will add more to it as we go along. The next category which I'm invested in is the consumer plus leisure plus travel, or I would like to say consumer space in general. Largest allocations are to a large cap travel and aviation leader. The second allocation is to a mid cap entertainment distributor, right? So this is I'm sure everybody will be able to guess this airline has been having some troubles lately, but this has generally done very well for me in the past, and I'm again investing in again. Then there is a mid-cap entertainment distributor. Let me know if you're able to guess it. It is one of the only players in this space, and therefore it gets a tracking allocation for me. This automotive consumer brand is the same one that we had talked about earlier. Finally, there is BFSI and digital finance. There are two stocks in here. One is a large cap digital finance platform. It is coming from one of India's largest conglomerates, and I've created a decent position in this company. The second is a mid cap regional bank. I feel like there's a lot of value in a lot of banks actually, and therefore I want to track the space in general. I have created a position in one of these banks. I will likely add more to a couple of other banks in the future. Then there is IT services. IT services, I feel, are important in terms of the anti AI play, and I think they'll likely benefit in the coming future. If you've not seen my last video on IT stocks, please go to the channel and check it out. All the stocks that I had mentioned in there, they've done very well since the video was made. I still feel like there's a lot of juice in our large cap IT stocks and mid cap IT stocks. So if you're somebody who's keen on understanding that space better, you can join us on Telegram and we can have a discussion about it. So this is what the allocation essentially looks like. About 60% is into industrials and manufacturing, 20% is about into consumer and travel, and the remaining 20% is into BFSI and IT services. Now, what I'm missing here and what I want to add is a lot of healthcare stocks. Maybe not a lot of, but a couple of healthcare stocks, because I feel that sector is also likely to do very well in the future. So in 6 months' time, I'd likely have one or two hospital, pharma, and healthcare names also in here. Now, that gives you an idea of what the what the position for the portfolio looks like. Now I want to speak a little bit about what is the rationale behind this breakdown, right? So what is the story essentially here, and what factors could change the weights essentially? So it could be certain things that would happen. I mentioned briefly that there might be a crash or a correction in the global markets in the next year, and at that point I am maintaining a significant amount of cash that I want to deploy as and when that happens gradually. Then there's an inflation glide path. There might be a shift between consumers versus exporters in terms of inflation. So a lot of the times, countries like the US are able to export their inflation away to other countries, right? If that happens, then there might be some shift happening from consumer to the exporter stocks. And finally, if there's any policy driven outcomes that might be able to change the position. What are the risks in this section? Well, their valuations are not really cheap. I would have liked to buy most of these stocks at a much lower level. However, that chance never came, right? Then there is an over reliance on domestic liquidity. I would like to see more FIIs investing in some of these companies and in the market in general. And finally, there is a lot of execution risk with this capex heavy stock. So the management quality has to be absolutely top notch. Now, there are things beyond your control like geopolitical shocks, which are absolutely nothing you can do to diversify. My suggestion is to generally look for good value stocks, which are supported by good management and generally executing very well. And finally, there might be some sector concentration. As you can see, about 60% of the sector is concentrated in very capex heavy, execution heavy stocks, and therefore that is a risk that is available here. If you like the video so far, make sure that you subscribe to the channel, join the Telegram group, and make sure that you share it with someone who likes to talk about stocks. And if you have a certain view about the allocation or the portfolio, if you've been able to guess the stocks, make sure you leave a comment and let me know if you agree with me or disagree with me. Now, if you're somebody who wants to build a career in finance, please make sure that you join my course on nismgym.com. Let me just quickly show you what this looks like so that you're able to sort of make up your own mind. So this is what NISM gym looks like. I hope you're able to see on my screen. If you're somebody who wants to learn more about personal finance, I suggest you join the NISM 10th A and 10th B courses. You'll be able to find some sample lectures on my YouTube channel. If you're somebody who wants to become a stock analyst, then make sure that you join the NISM 15th course. You will get everything that you need to know in order to understand more about corporate finance and become an expert stock picker. I have had very good result over the last 10 years by following this, and I've created this especially for your benefit. If you're somebody who wants to become a registered SEBI research analyst or a SEBI investment advisor, then you can take the mock test that I have on my website as well. All of these have been done in accordance with the NISM guidelines, and they are following the same pattern, and they are time tests. When you take them, you will be able to sort of do mock tests of 3-hour exams and start building your career from there. So hopefully you like this video. Let me know if you have any other suggestions, ideas, or comments, and see you in the next one.